Hi, Jonathan York from Bay Financial Partners, looking at investment markets. US stocks still continue to recover, and that's sort of helping the global picture. We're quite a way off the recent lows now after the sell-off in early February. But it's still interesting to note, with the Dow now around sort of 25,500, a little bit above that. That's still over 30% above where the Dow was the day after President Trump won the US presidential election back in November 2016. So, the market has come a long way. We haven't seen any decent correction, and certainly that sell-off at the start of sort of February, culmination of factors really. The fact that the market has just pretty much been going up in a straight line with no meaningful correction. There was potentially a little bit of margin trading on the cryptocurrencies, which caused a little bit of angst as they sort of fell quite aggressively. But also as well, the market's starting to get its head around the fact that interest rates are going up. Just on the back of that, you've seen the new Fed chair, Jay Powell, testifying before Congress. And it's interesting now he's starting to sort of sow the seeds potentially for possibly four interest rate hikes from the US this year. Fed funds target rate currently sort of 125 to 150. That's expected to go up to 150, 175 in the March meeting. And now sort of talking about potentially if the economy continues to grow at a very strong rate, and you've got obviously unemployment down in the US down sort of low fours, pretty good growth, and also the signs of a little bit of inflation coming through as well. And that may just prompt the Fed to possibly increase by sort of 4 times to really get ahead of the curve rather than playing sort of catch up all the time. Now, really, it's not too much to worry about. Obviously, for bond traders, it's going to be interesting to see that sort of rising yields. But for equity markets, the US economy, and really the global economy, is still showing pretty good signs of global growth. And that's going to keep the economy sort of ticking along, certainly for the next sort of 12 to 18 months. Interesting to know as well, oil has sort of come back as well from those sort of low 60s. Currently around sort of 63 and change on a WTI, and again, that's sort of just slowly grinding a little bit higher. Eurozone looking in pretty good shape as well, reasonable growth going through, and the ECB, there's a little bit of talk about potentially when they're going to start to sort of wind down their sort of bond purchases. That's probably going to be sort of September, October of this year. Brexit's still rumbling along, maybe a little bit of sort of headway being made, but really we're getting down to sort of crunch time really, and there needs to be a little bit more headway made. In New Zealand again, the economy is pushing on at a pretty good rate. Interesting to see we have a new leader of the opposition, Simon Bridges. And it's just going to be interesting to see how the National Party under Bridges' leadership sort of looks to challenge the government, but also as well sort of sets their policies forward for really what will be the sort of major test, which will be the 2020 election. On the fixed interest side, New Zealand, there's another bond out there from Transpower. Looking around sort of 380-ish and on the sort of coupon. If you are interested in that, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. Obviously quite a bit of talk as well, KiwiSaver on the recent sort of market volatility. It's interesting, KiwiSaver is a long-term thing. It's a long-term savings for retirement. And you really shouldn't get caught up in the sort of short-term sort of angst and volatility by sort of jumping ship and trading, sort of transferring funds from one fund to another just because the stock market's gone down, a few hundred points. You know, if you're looking for the longer term investment, which you are with KiwiSaver and retirement, you know, if you're looking for sort of 10-15 years before you're going to access those funds, a little bit of short-term volatility really doesn't matter too much. You know, it's just very interesting to make sure you keep your sort of eye on the prize and keep your goals set. If you're looking for that longer term investment, to say, you know, make sure you continue to focus on that rather than sort of short term volatility. Because if you're not careful, you know, what can happen is that, you know, if you're in a growth fund, for example, and it's fallen a little bit in the last month or so, you end up chopping it out into a conservative fund. The growth fund then recovers. You don't get any of that recovery, and you're sitting in a sort of cash fund or a very defensive fund that is getting obviously quite a bit lower returns. Now, if you're interested in talking about KiwiSaver, give us a call on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.